The market took a dip on earnings, but will it continue this week? Good evening, my fellow Riz Elite members and all of our subscribers here on YouTube. Welcome to our Elite webinar. Now, if you are watching this replay on YouTube and you haven't done so, do me a solid, hit that like and subscribe button, and make sure you click that bell icon right next to it to get notified every time we upload a new webinar here on the channel, because you're going to want to be kept up to date with what's going on in the market lately, because man, has it been wild. Volatility is back and the market is just going. And we had quite a couple of days, especially Thursday and Friday. My goodness, look at the whipsaw in the market. We've been, moving. Some earnings were good, some earnings weren't so good. And the market has just been moving incredibly violently, for lack of a better term. We came in here, Monday, Tuesday, Wednesday, pretty much, nothing too big of a deal. We gapped up on, or excuse me, gapped up on Wednesday. Thursday looked like we were going to continue to gap up, and then we just had a massive sell-off here down to the 50 moving average here. No, excuse me, the 100 moving average. And then on Friday, we dipped even lower, massive gap down. However, there was definitely some buying pressure down here around this 5,300 area that the market did kind of bounce up off of. Now, I do have, of course, my partner in crime, Riz Memon. Riz, what has been going on with the market?
Yeah, definitely red, definitely bearish.
Yeah.
A big break of that upwards trend. You can see that big break of that big, beautiful teal line, trend line
Hmm?
that's held up so far. Not so much anymore the past week and a half. Um, and I can say actually because this is it's Sunday. We're doing today's webinar on Sunday,
Yep. Yep.
and futures open at 6 p.m. Eastern. And I can tell you guys right now, Chris, for you as well, SPX futures right now, cash market 52.92, down 1% from Friday's close. So
Oh
52.92,
boy.
that's where we are right now, below that 5,300, Chris. So if you want to outline it for people right now, again, it could be different once market opens. Obviously, it will be different, but right now, 52.92. Look at that beautifully. Chris just made that. That's where we are right now in futures at the time of this recording. Um, so that's very interesting. We continue to see a drop, continue to see a sell-off. I'm sitting pretty. My account performance has gone up. The value is down because, as you know, Chris and others have taken out about 877K out. So the account value is down, obviously, from the 2 point something mil, but uh, the performance just continues to go higher and higher. We're at 31, probably 31.5% now. Um, Performance year to date. Compare that to the S&P 500, which year to date is only up, let's say, about 10%.
Bit of a difference there.
So not bad, triple, right? We're
Yeah,
not bad,
right?
right, Chris? Not bad, right? Another year. Another year. If we had to pull the plug on the year how it is to, now, I'd be pretty happy with tripling the market return. Um, while taking way less risk and exposure. But that's again aside to what's happening with the market. I think there is definitely I think further downside. I'm not even gonna go to say that okay, we're gonna see a crash again. Sorry, that's not you're not gonna hear that from me. I think the 5250 area is the next stop. Okay. I think we are heading into, the end of summer. These months, seasonality wise, I'm not going to explain seasonality, but for those that understand what seasonality is, historically, seasonality wise, these months are usually a little bit more leaning on the side of bearish. Okay, just something to consider. Also, another thing to consider that white line at the bottom there, the RSI, is also kind of getting oversold, not there yet, but getting there, right? So don't be surprised if during certain points, even within a downward trend in the market, you see a little, buying, you see little relief rallies, you see little dip buyings, right? You see little dead cat bounces, right? So please be aware of that. Okay, please be aware of that if you are considering maybe hedging or shorting the market or shorting different stocks. I'm not saying you should, but I'm just giving you a theory that if you do, be careful of those things, right? Um, but in my view, I think we could definitely see 5,200. I think 5,200 is still, in my view, based on all things going on, uh, macroeconomics, microeconomics. Yeah, it's an election year. I think 5,200 is still kind of high, but I think we could stay at this level. We could stay at 5,200. We know that 5,200, kind of 5,250 area, that yellow line um, is that key support area. Okay. It's a strong support area, uh, all the way dating back to end of March, beginning of April. So keep an eye on that. We do have some earnings continuing, but the heavy hitters, the big names, are done, right? And I'm sure we'll touch on what's coming up in the earnings calendar, but that's mostly done. We've had Apple and Amazon and Microsoft and Facebook and Meta, I mean, Meta and, Google, Alphabet. And the earnings overall weren't that stellar, right? We've seen Amazon drop, we've seen, Microsoft drop a little bit, we've seen quite a few of these companies kind of pull back. Rightfully so. I think they were really lofty anyways. But not surprised at all, right? Meta is kind of the only one that's kind of done a little bit better. As Chris brings it up. But even then, if you look at it, pretty much stuck in this range, and that's completely normal. Uh, but yeah, I think we can continue to see some downside. I am not coming in and buying the dip on tech or anything like that yet. It's a bloodbath for a lot of semiconductor companies, rightfully so, because even now, even after the pullback in semiconductors, they're still very overvalued.
Yeah, there definitely has been a flush in a lot of sectors. And of course, the one taking the biggest hit is tech. I mean, look at that. We are now underperforming the S&P 500 in term for tech, which is the first time I've been able to say that for a long time, it feels like. I do need to update this. Let me just hit that year to date. There we go. That's a bit better, but still, yes, really getting battered this week with those earnings results. Like you said, not as good as expected. And they paid the price for it with communications still remaining above, the S&P 500 and utilities for the first time this year, outperforming the S&P 500. That is impressive. And if you remember back from the start of the year, one of the things Riz talked about to keep an eye on was the utility sector. And that is, that prediction is starting to prove itself true. So really kind of coming back up here, currently out overperforming the S&P 500. We took a major dip here for the SBX down from about plus 19% to about 12% on the year. We'll call it 13 if you want to round it up. And then we have a lot of things that are underperforming right now. We got financials, tech, consumer staples, healthcare, energy, real estate, consumer discretionary, all underperforming with consumer discretionary taking a big drop this week. Also, kind of following those earnings results down, now actually is below the zero line on the year. So, yeah, a lot of big sector movement here. And, Riz, you were calling for this sector rotation with tech, and people definitely seem to be selling out right now.
Yep, yep. And I'm glad my utilities thesis worked out as well, because I mentioned, even specifically, I said, look, watch for when the market gets a whiff of rates coming down. And we didn't touch on that, but the Fed did meet. And Powell said there was no rate cut as expected. But pretty much based on what he said and based on what the data is showing, because job numbers came in and they weren't that good. Or sorry, unemployment numbers came in, they weren't that good. Unemployment went up a bit. And it's pretty much cemented a rate cut for September. Okay. Now the variance is it going to be a 25 basis point? There's some talk that maybe it's even going to be 0.5%, 50 basis point cut. That would be a
That's a
bit
lot.
unexpected. Yeah, I would think that's a bit unexpected. Who knows? Who knows, right? Maybe there's more data that comes out, and by the time the September meeting rolls around, we see there's data that then Powell and the gang are like, yeah, okay, we're going to do half a basis point, because Canada right now, I will say, is 50 basis points ahead of the US in cuts. So we've already cut 50 basis points so far, and the US has obviously not done any cuts yet. But once again, we'll see if that's the September one, which I would think is like, I think it's never guaranteed, but I think it's like 99%, gonna happen. So let's see. It'll be interesting. I will caution people that people are like, oh yeah, rates coming down, great, rates coming down, lower borrowing costs, better for corporate, debt, better for the average investor who has, um, rotating open debt, but historically, when you see that rate cut, what does that mean? That tells you that the economy might be slowing down. And once the market starts, I would say, factoring that in and really come to that realization, especially with corporate earnings now not being the greatest, especially with unemployment ticking up, right? The market's eventually going to start digesting this thing, and it's going to be like, whoa, maybe the economy is slowing down. And then it's going to start thinking, maybe there is no soft landing. Maybe we do go into a recession, maybe a mild one. And then what do you think is going to happen? You think markets are going to be hitting all-time highs? No, no, no. They're going to be more likely making a leg lower, right? And this is why I've been telling people, hey, if you made money in tech, you made money on the run-up, you made money in semiconductors and Amazon and all these other companies, great, fantastic. You should have already been taking gains. You should have already been taking gains. And I will implore you, if you are still in these companies and you have a good amount of profits, and of course you're trading, meaning you're not looking to buy and hold for years. I still think it's not a bad idea to take the gains. Um, just simply because I'm seeing more downside than upside. All right. Uh, but let's see. Fun times ahead, right? And of course, the clock and the days are ticking by closer to that November auspicious day, right, Chris?
Oh yeah, it's going to be a wild back half of the year to say the least. And I have to kind of agree with you. I think that rate cuts in September make the most sense, especially for that day in November that we're talking about here. And again, don't read anything into this. Every administration does it, but it's not uncommon to see, a little bit of work there. Say like, oh hey, look, we're doing a good job. We're getting inflation under control. We're cutting rates now. Everything's great. So yeah, it's going to be a pretty crazy year. And of course, we've got everything going on in the Middle East right now. If I had to put money on it, I'm guessing that's kind of why futures are a little bit lower, but we'll have to wait and see because we definitely have more things going on in the markets than just the numbers. So let's go ahead and take a look here at the breakdown for oil and gold because, man, we keep just on rolling here with gold just slowly inching back up forth or back up here. We kind of made this new all-time high here in about the middle of July. We kind of creeping back up and a little bit of selling off there, to kind of finish the week off for the most part. But, gold just continuing to hold above this 2,300 area, very strong at this point. Oil actually coming down this week quite a bit. Well, not quite a bit, but it has been coming down quite a bit since about the beginning of July when we started here at about $83. We'll call it 83 and a half per barrel. And now we are dipped down here. Let's see, where did we close? Looks like $73.90 odd cents, though I believe it's picking up the oil futures right now, if I'm not mistaken. So we are getting a little bit of a look into the future as far as what oil prices are looking like. So yeah, Riz, I mean, oil coming down, gold going up. Commodities are still pretty volatile, just like the market.
Yep, commodities definitely volatile. Obviously, gold continues to hold up pretty well, surprisingly, but that's good. Not surprising considering, rates are coming down. Not surprising considering we got election, not surprising considering the geopolitical stuff continuing. But one thing that is surprising is oil. And this actually marks the fourth weekly decline uh, in oil prices, right? Fourth consecutive weekly decline. You can see this downward trend, big bounce downwards off that 80, what is it, 85 support or something like that, 85 support trend line there. But yeah, this is great. This is not bad. I think it's good for obviously it's good for inflation, it's good for affordability, it's good for just a healthy supply and demand market because remember, if we have oil prices too high, it causes a destruction in volume and demand. And I think here at these levels, it's pretty healthy. Maybe we see it go lower depending on, you know, what OPEC does. OPEC has said they're going to continue to keep things as they are. Maybe they change their mind as things continue in the year, right? Uh, but no direct oil exposure or gold exposure for me.
Yeah, and that's something definitely keep an eye on with OPEC, what's going on, especially if tensions continue to mount in the Middle East. It should be very interesting to see what happens there. All right, let's take a look here at the bond yields real quick. Let me get that switch. There we go. We got the bond yields in the dollar, and wow, what a movement in the bond yields to close the week off. Obviously, with everything going on, Riz, alluding to the fact that the Fed basically said, okay, yeah, we're targeting September for rate cuts. Looks like the bonds have said, okay, we believe you because bond rates absolutely just plummeted on Friday, going down very significantly over the the back part of the week for the most part. Really, really trending down. The dollar as well, taking a big hit on Friday from where it was. We had been consolidating. Now, I'm not going to sounding the alarm or anything like that. We're still holding well above this 100 area, honestly, right above 102. So we're holding, the dollar is holding, even though it did take a little bit of a hit here. But man, Riz, the bond yields, my gosh, that is what a massive drop for just 1 week.
Yep. Yep. Pricing in, right?
Yep.
Clearly, you can see the whole fact of pricing things in at play. We can see that. Even the dollar, right? US dollar. I said this again, something I've been saying again and again. I hope people get value out of this. I hope people watch this and have been watching because we've talked about this and mentioned it to the T. I'm not going to give myself a pat on the back, but I'm just saying how it is. Where I said, look, watch the moment the Fed signals a clear cut date or timeline. Okay, it's September. Here we are. Look at the bond yields come down, right? Look for when that happens for that to impact the US dollar. Boom, here we are, right? Not a coincidence. Not a coincidence that this Wednesday was when Powell made the decision to not cut, but to actually say that we're most likely going to cut September. And the market immediately started pricing that in, right? Whether it's the currency market, bond market, stock market, they all start pricing things in. Maybe not the most rationally or right away or in the way that you might think always, but they do. And that's the beauty of markets, especially now in the fast-paced, efficient, technologically driven markets where, there's information is not no longer, I would say, an edge. It's everyone has it, and it's always baked in and always being baked in to the price.
It really is. Definitely information is flowing faster now than it ever has in the past, and the market is definitely pricing these things in as they happen in real time. Now, like Riz said, some things are delayed, some things happen immediate, but definitely the market is watching, for lack of a better term. And speaking of watching the market, let's take a look at the dates for the market this week. There are none. We've got ISM Services PMI for July coming out. Nobody's going to be watching that. Let's just call a spade a shovel here, because yeah, this is really not a really big number that people are going to be hanging their hat on. But we do have earnings coming up. But before we get to that, if you are here on the live call and you have a question for Riz or myself, please don't hesitate to go ahead and post that in the chat now while we go through the earnings calendar. Now, Riz mentioned that we got through the big names for the most part. There are a couple names left to keep an eye on. If you like Warren Buffett and you've got a whole lot of money to be able to afford BRK.B, well, they report Monday before the openings, but for the normal folks, such as myself, good luck. Don't think we're going to be buying any shares in Berkshire Hathaway. Uh,
A shares, A shares, A
A
shares.
share. Okay, fair enough. Yeah, you could get A
B
shares.
ones you can buy. B ones,
Okay.
yeah, but the A ones are like, six figures per share because
Oh,
those are
it's
the
that one.
yeah, BRKA are the voting ones, B are the non-voting ones.
Okay, gotcha. So if you want to vote in Berkshire Hathaway, you got to be loaded. But if not, for us common folk, you could get into BRK.B if you wanted. But let's see. After the close, not really too much there. We've got Palantir, nothing too exciting to talk about. And as far as that's concerned, Tuesday, if you need a car ride, Uber's there for you, and you might as well drink a Celsius while you're doing it, because they're reporting before the open on Tuesday. After the close, Airbnb, maybe nothing really too exciting there for people who like posting, on online. Reddit is posting their earnings, but again, really not too anything to keep an eye on. Now, here's the big name we've got coming up Wednesday before the open. And no, it's not Shopify, it's Walt Disney. Disney, the big name, reporting here. We've got Novo Nordisk reporting, a biopharma company. And honestly, that's pretty much it for Wednesday, if you ask me. Looking at these names, nothing too exciting. Then we got another big pharma company reporting on Thursday, Lilly, which has been absolutely beat down lately. They are reporting before they open on Thursday, so that's going to be an interesting one. Datadog is one that we have kept an eye on here in the past. And, that pretty much covers it here. I'm looking, there's really nothing on Friday. All I'm going to say, if smoke them if you got them, because CGC is reporting before the opening. But that's really about it. I mean, like you said, Riz, most of the big names have already reported, but just a couple big names left. Disney, Lilly, going to be my top two for the week.
Yeah, you're absolutely right. More growth names mixed in with maybe a couple of large names, like you said, Rivian. Sorry, Disney. We got some of the electric automakers also, right? Lucid. You
Yeah.
got Rivian. We also have Uber, like you mentioned, and Lyft as well the day after on Wednesday before open. We also have SMCI, Supermicro. So that's the high flying semiconductor, one of them at least, that's had a massive run this year. So that will be interesting to see after close on Tuesday. We also have Unity. I know a few people in Elite that have traded. Again, these are mostly growth names, right? Um, uh, that they're reporting trade desk as well. But other than that, yeah, you're right. We got the vast majority of the big stuff done. We also have Oxy, another thing I just missed, but there's right there, right? Oxy. Um, we got Marathon Petroleum. So a couple oil plays releasing as well. So it will be interesting to see. But other than that, like I said, a lot of the earnings have come through subpar. The market's obviously kind of started pricing that in. We've seen some of the dips in some of these companies, and one of the reasons I don't like to trade earnings, as you know, is because anything can happen, and I
Yeah.
mostly like to see if the opportunities present themselves post earnings.
Definitely. Playing earnings is a very risky endeavor. And yeah, trying to figure out which way it's going to go is very difficult, even if they hit earnings. If they exceed expectations, even sometimes the stock goes down even after that. So definitely something to keep an eye on. Now, as our people here in the live chat are posting their questions, I did have somebody send me a message yesterday and wanted us to take a look at Starbucks. So let's pull up that pumpkin spice latte. It says, hey, I would like for you to take a look into Starbucks during the webinar. It had earnings already. He currently holds a call on it, but he would like to add some common shares at some point in time. Is this a good time to take a starter? Thanks for all the lovely work you do. Well, thank you so much for that question and that lovely compliment. I really do appreciate it. So, post earnings here, we definitely did jump up over the 50 moving average, but we were not able to hold it with that market sell off on Thursday and Friday. Now, we did kind of bounce up here a little bit on Friday. I will say we are kind of in a little bit of an uptrend here on Starbucks, but nothing too exciting because we've still got a massive downtrend that we need to contend with here that's been going on for quite some time on everybody's favorite coffee maker. Starbucks has been in a downtrend for quite a while here since the end of last year. We may be starting to see some life out of it, but man, it's if you're looking for a dip buy, this could be a potential option for you. But Riz, what are your thoughts on Starbucks?
Yeah, you're right. I think it's looking like a good entry zone, in my opinion. Just, those trend lines there, not a bad entry. Earnings is done. We aren't quite into pumpkin spice latte season yet, but
We're
I mean,
getting
we are inching
close.
closer, right? But yeah, I think this is fine for an entry. Keep in mind, of course, as we touched earlier on the broader market, right? If futures are anything to go by, it's looking to be a red start to the week. And we'll see how, it impacts Starbucks. But I think all things considered, not a bad entry point here for a starter.
Absolutely. All right. Dylan wants us to take a look at UPS and Johnson and Johnson. Let's take a look at UPS first. Now, obviously, we kind of, we had this rally, this pre-earnings rally came up here, tapped the 200 simple moving average and had a pretty hard rejection. Earnings, excuse me, came in, then they got absolutely clobbered. And to be honest, they missed pretty hard. We missed by 10% on EPS. That's not an insignificant number for a company this large. So that's a pretty big hit and they got hit pretty good because of it. Now, I will say that we are holding this area down here, this 127, 128 area. We have been holding over that pretty good, if you ask me. But yeah, Riz, is it time to get back in UPS, or is it time to kind of let this one go?
Yeah. So again, no position for me, but this is more of a wait and see, right? I think it's been clobbered. It's been going lower. It's really bad downtrend. Obviously, not very bullish at all. Um, but again, I don't think the company's going anywhere. I think, yeah, they're taking a hit. They're facing some supply chain, like not supply chain, but like logistics pressure because they have more competition. But ultimately, I don't think they're going anywhere. They're still one of the larger or one of the largest logistics companies out there. So I would rather wait and see if someone has a position and you're already down, give it a little bit of time, see where it goes. Keep an eye on that 124 area, right? Maybe you want to have a line in the sand. I don't use hard stop orders, but you do want to have like a mental stop or area where you're going to say to yourself, well, this is it. I'm giving it to this price and then pulling the plug, right? But for an entry, I would also see where it goes. Let it consolidate a bit, right? Especially with if markets open red and especially considering markets are in a little bit of a downtrend, you don't have to be in a rush to go and buy stuff right away.
Yeah, absolutely. I mean, we took our beating from earnings. We're holding steady, but yeah, of course, the broader market is going to weigh heavier on, a stock like this than say, than earnings necessarily would. Now, of course, earnings was pretty harsh, but definitely holding. Yeah, we'll see how things go. Now, let's go ahead and take a look at Johnson and Johnson. Who needs some baby shampoo? All right, so Johnson and Johnson on a massive rally here, post earnings, looking spectacular. If you've been an elite, you know that we took this a while ago. If you were in it, congratulations, you're looking great. I don't know if I'm going to be chasing it up this high, but we definitely have been here in the past. We've been higher in the past, but yeah, Johnson and Johnson looking really good here, making a very nice move. What are your thoughts on this one, Riz?
Yeah, definitely good. Again, I'd like to have some context, right? What the position is, someone looking to get in long, or are you already in? You know, but that's fine with what the information I have now. I think it's definitely bullish, looking good. It's been a stock that's kind of been very depressed and in a lull um, all year. Obviously turning that around. But I wouldn't. I like to. We've already traded it, already made money on it. So I wouldn't want to get back in here. I'd like to see if it comes back a little bit lower, especially below the 160, 158 area for a potential re-entry. But yeah, Dylan says, looking to get in no position currently. I would personally feel more comfortable just waiting for a little bit of a pullback in it, and then get it, right? We've seen this move from 146 to 164. That's quite a bit of a move in the past 2 weeks, right? So, and it's also getting overbought. So I wouldn't be in a rush to enter here just yet.
Yeah, I think patience is key on this one. I don't know if you really want to chase this rally. That seems like a very dangerous proposition. So I like your idea of kind of letting it come back, let it come to you, and then look to see where it finds a floor, and then maybe you can get in at that point. So that seems like a pretty good plan to me. All right. Well, I'm not seeing any other questions coming in at this moment. So, just want to take a look here. As you said, Riz, looks like futures are looking pretty red so far. Looks like we may be starting the week off red for the S&P 500. Obviously, a lot going on around the world that's weighing heavily on the market right now. What are the things that you're watching this week that can kind of drive the market? Obviously, conflict in the Middle East is probably one of them. What else is going on? And then I see Ryan just posted a question. I'll get your thoughts, Riz, and then we'll take Ryan's question as the last one.
Yeah, I'm looking to see if this continuation goes lower, right? Right now, at this moment, yeah, there's we already do know futures are down about 1%, but more than that. I'm looking to see if 5250 hard support area holds up. And if it doesn't, oh boy. I mean, we could easily see 5100 at some point. And what would that be? Chris, if we see 5250, how far are we from the highs?
Let's take a look here and figure out how far that is.
Yeah, about 7.5% roughly. Okay. Um, yeah, so it's still not in correction territory, right? If we see it come to 5200, what would that be? Nine, 8.5.
About
Yeah,
eight.
about eight. Okay. So, and Chris, bring it down to about a 10%. Where are we at if we to see official correction territory? Look at that, right at that 5105,
Yep.
5100, let's say. So if we see 5100, that's the official pullback, or sorry, correction area. Remember, 10% to 20% is a correction. Anything above 20% is a bear market. Um, 50% or so, it's like a crash, but I don't hold out for that. That didn't really happen. Even during a life-altering pandemic, we only had like a 35% drop. It was fast drop, but it was 35% drop. So don't hold your breath for 50% drop, but like, you know, uh 40%, some can qualify it as a crash, but 20% is the official bear market uh signal. So we're not even at 8% yet for the SPX. For the Nasdaq, let's bring that up because we know obviously tech is uh important, it's big, and we've seen this thing pull back now after Friday's just slightly above the correction territory. So you notice how the tech names are taking a bigger beating, right? Nearly 11%. And for this, it's right at that 448, 450 uh, support. So if this breaks tomorrow, which it kind of looked like it will, uh, wouldn't be surprised if we see, 440, 430 area. Chris, try and bring up, type in NQ, see what that brings up. Probably futures, right? Yeah. Okay. That's fine. Um, that's okay. But yeah, you can see, futures. This is the Nasdaq index futures. Now 18,200 currently. So you can see already below that support rate that I mentioned before. But on the ETF side for the QQQ is a 450 support, right? So interesting times. Let's see how it goes. I think if I have to make a call on how things go this week, it's definitely looking bearish. But this is healthy. This is what's needed. And I just hope everyone's positioned correctly. That's all I can say. That's all I can do. I know I've made the precautions. I've done what I can to let people know. Obviously, I've done what I can for my portfolio. I've done what I can to let everyone in Elite know my views, my thoughts, how to prepare, how to be insulated. And apart from that, obviously, the end user, the end trader, it themselves is the one in control, and they're placing the trades, right, and pushing the buttons. So I hope you were able to capitalize and follow through with it.
Absolutely. All right. We did have a couple questions come in. Promised to get to CRWD, and then we got Procter and Gamble. So obviously, CrowdStrike taking a bigger beating than even some of the other names out there. Of course, with that massive system outage that we had here on the 19th of July, definitely weighing heavy on it. And then we got some news that I guess, like, if I'm not mistaken, there were some suits being handed out. What was that? Something like an Uber Eats gift card or something like that. I think we
Yeah.
talked about that last week. But man, CrowdStrike getting absolutely brutalized here.
Yeah, it's down like what, 44% from the highs, right?
Yeah, let's take a look.
45. Yeah.
45.
So definitely a haircut. I can say we have a position, we're down on it, but I'm continuing to carry. Definitely not where we want to be, but look at how oversold it is. It doesn't help. I can almost guarantee that had it not been for the market sell-off, the market pullback, sorry, and drop, this would have fared a little bit better. But because we had this outage, we had this sentiment, we had this kind of bad publicity, plus you factor in that the market's been getting, you know, shoved lower, damn, it's not looking good. And it's definitely kind of like that perfect storm, but in a negative way for it. A lot of headwinds here, but I want to see if it can hold up above that 200 area. Probably would get close there, just by the way it's looking. But we know we've seen this before. These companies have massive swings. You might need to kind of hang on, carry it out, depending on your position size. Maybe if you feel confident, if you have a room, if it makes sense for you, consider averaging. And again, I'm not saying you should. Let's see it find a floor. I thought, you know what? Once it started consolidating there for 2 days around that 260 area, I thought that was it. Then that break below, gap down, oof. Then I was like, okay, well, clearly not. So, like I said, this is not a guaranteed thing. Nothing in markets are guaranteed. This is not a sure thing. Markets are not a sure thing. Trading is not a sure thing. It's all probabilities. Um, but hey, let's see how it goes on Monday. So far, it's looking like it's coming lower.
Yeah, Yas is saying it in after hours it's down to 200. We'll have to see if that holds
Yeah.
going into
Yeah, like
Monday.
overnight, Sunday night. Yeah, I know you can trade some of these names overnight, but it's just I can't glean too much from these. Like
Yeah.
it's it's yeah, just pricing in, the market drop with futures, right? Not surprising.
For sure. All right, let's go ahead and close out the webinar with Procter and Gamble. Looking like we, had a pretty big sell-off going into earnings here. Looks like we dipped pretty hard, held up, and basically cleared the gap. We filled the gap basically. We gapped down. We're right back where we were here with Procter and Gamble, but man, looks like earnings were decent. Looks like they missed on revenue a little bit. I can't comment as far as what their outlook was or what they were saying as far as that's concerned. But yeah, quite a bounce here, Riz, on Procter and Gamble.
Yeah, this is funny. I mean, not funny, but just a little tidbit. I when it dropped post earnings, I was like, okay, I think maybe we can, that massive. Look at that indecisive candle, two indecisive
Yeah,
candles, right? So I'm like, I was thinking of an entry. I like the company. I like the price where it's. I like the valuation. Earnings weren't too bad. And I'm like, okay, but then I seen that, look at the price, like it's very indecisive. I'm not sure if it's, yeah, maybe it gets closer to the 200-day moving average for the close. You can see those, the wicks, the tails there, but it closed higher, right? So I'm like, maybe we can actually close closer to 158, 59, even 160, and then we'll take an entry. Uh, Nope.
no kidding.
Thursday took right off. And I'm like, damn, okay, well, there it goes. And then Friday it went higher, right past the 50-day moving average. So for me, that trade is a wrap. It's moved on. We missed that trade. This happens actually more often than you think. It's completely normal. And right now, I'm not looking to enter as it touches this 170 triple top now. It's almost a triple top. So let's see where it goes.
Yeah, definitely. Seems like a really risky trade to take here. As you said, the entry was down here, and we just missed it. And that's trading, for lack of a better term. Sometimes you nail the entry, and sometimes the entry nails you, and it just runs without you. And there's really not anything you can do about it. So. All right. Well, I want to go ahead and send a special thanks to all of our elite members who made the live webinar. Thank you so much. Thank you again for all of our viewers here on YouTube as well. We really appreciate each and every one of us, or one of you rather. And then make sure you slap us a like and leave us a comment on the way out. Let us know what you're watching this week, and we'll see you in the market on Monday.